Here we're looking at a sample balance sheet for a company by the name of Shirts That Fit. A balance sheet provides detailed information about a company's assets, liabilities, and shareholders' equity. It shows a snapshot of these key metrics at the end of a reporting period. It does not show the flows in and out of any account during the time period. So think of a balance sheet conceptually as a picture of a company where its financial position is at. So in a sense, if you were to take a camera and take a quick snapshot, a still picture, this is what a balance sheet shows you about a business. A couple features to note. Up here, as you can see, this is at a specific point in time. So this is showing the balances of a company's accounts at the end of the year 2009. Secondly, every company's balance sheet should in effect balance, hence the name. So all assets right here should equal the amount of liabilities plus owner's equity down here at a company. As you can see right here, we have $84,288 under the asset line. If we scroll down here, down to liabilities and owner's equity, this actually makes sense, as Shirts That Fit has a balance sheet that actually balances. So I'm going to zoom in here and go over specific categories. So here we have the assets section. Assets are things a company owns that have value. This typically means they can either be sold or used by the company to make products or provide services. Assets can include physical property such as plants, trucks, equipment, and inventory, as well as things that can't be touched but nevertheless actually exist and have value. This can include any trademark or patents that a company owns. As we work through the assets section, as you can see, we have cash, accounts receivable, this is money that people owe the business, inventory, and we have a summation of total current assets. Current assets are items and things that companies can liquidate typically within a 1-year time period. So this is very important to creditors and people who have claims against a company's assets. As we move down into the property, plant, and equipment and other asset category, these are what we call longer-term assets and cannot be liquidated or transitioned into cash for a time period more than a year. As we scroll down now here, we have similarly in the liability section, which are the amounts of money that a company owes to others. This can include any type of obligation. We once again have a total current liability section. These are the monies that a company owes to other entities within 1 year. And then as we scroll down here, these are other long-term or non-current liabilities that a company owes to other parties but have a time horizon of more than a year. One interesting thing to note for business owners are the liability section is where a company will show how much debt it has on its books or how much of a loan it's carrying that it owes to a bank. So right here on the note payable section, as you can see, it's under current liabilities. This is the amount of money that a company owes to a creditor or whoever's provided the loan within the next year. As we scroll down here to this $50,000, this actually shows the amount of a loan, in this case a bank loan, over a time horizon beyond that year. So this is a longer term liability. And we will scroll down here. The last section, owner's equity, which is also referred to as shareholders' equity, can also be called capital or net worth. This is the money that will be left over if a company sold all of its assets at the top of the balance sheet and then paid off all of its liabilities. So in a sense, this is the leftover money that belongs to shareholders, the owners of a business.